Hello, investors. It's been another decent month for your portfolio. The index was up about 2.5%, and I think we've done equally well. So it's satisfying that after the outperformance last month, we have stabilized and continue to do well and have a good recovery path. This month, I read something wonderful and which I feel the need to share with you because it very much reflects our thought process as to how we have aligned your portfolio. And this really concerns you and your investments with us. So I read a beautiful report by McKinsey called The Great Acceleration. And this report is about how in the post-COVID world, a lot of sectors and industries which were already doing well would have a quantum leap that would benefit these companies and of course those stocks and investments. So let me share with you the summary slide, which will give you a very good idea of what I'm talking about. So McKinsey says that COVID-19 pandemic of 2020 has reinforced and even widened the gap between the best and worst performing industries. So what you see is the 6 best performing industries pre-COVID, and at the bottom you see the 6 worst performing. And their growth rates you will see is on those purple dots pre-COVID. However, what has happened is in the post-COVID world, these 6 in fact are starting to accelerate their growth rates. So the blue lines that you see represent the fresh growth rates that these industries are expected to uh, move going ahead. So what it really means is that the incremental value added is about 275 billion in profitability of these 6 sectors. And similarly, those who were losers, in fact, are going to lose more. So that is why they call this report the Great Acceleration. It's just that those who are doing well are going to do better, and those who are doing bad as it is are actually going to worsen faster. And that is the divergent trends, but that is also what we call the K-shaped recovery that the world is experiencing. So let's just put it up in a more granular way. So the top 6 industries that globally is felt will be big beneficiaries and where you will see good growth is semiconductors, pharma, consumer, software, technology, hardware, and media. And sectors which were already struggling pre-COVID are even going to have it worst. In that, you have capital goods, insurance, banks, financials, utilities, and energies. And when I saw this slide, I actually smiled to myself and realized that, interestingly, your portfolio is already in tune with this thought process. So you will notice that, as I shared last month, the overweight pharma is the big theme. We have about 19% weightage to pharma, where our top holdings are TV, Zipca, Abbott, Alchem. Again, a very little known sector, but with excellent results and a very big migration that's happening from China, specialty chemicals, 14% weightage, in which you are holding SRF, Pidilite, Atul, Deepak Nitrate. In the consumer non-durables, again a 15% allocation with Jubilant Foodworks, Dabur, Berger. And in the IT space, we already had InfoEdge, which is Naukri, and L&T Infotech. This month we have added HCL Tech. And as I shared with you that our share or allocation to IT is increasing. So these are the 4 big mega trends where you are positioned with. And what is interesting is that this is so much in sync with what McKinsey has been saying. So if you look at the top 6 sectors that they are projecting to be the big growth engines of the world, semiconductors, unfortunately in India, we don't have any such listed companies, but pharma, yes, as I shared with you, it's your largest single overweight. Consumer products, again, this is an overweight bet. And we have been moving to software, and I think we will move further overweight into the software and IT areas. As far as the bottom goes, you will notice that there's one sector that globally may be struggling, but we feel is in a sunrise state in India, and that is insurance. And that is why we also are in overweight insurance. We don't have much in the other spaces. Banks and financials is a very courageous bet from my side, is that though it is the largest weightage in the index, but we have restricted ourselves to very few quality companies. The reason is that due to digitization, there is a very big migration, or the way people will bank, or the way even your banking is changing to online from going to a branch and filling in the paying slip. And this is going to dramatically change the face of banking. So that is why you will find that we are relatively underweight banks. But even in banks, we have the best quality banks, which have the profitability, which have high digital penetration, and which we think can go ahead and weather the storm. So to sum it up, it was quite satisfying to see this report and realize that your portfolio finds reflection in this thought process of McKinsey and Company. So going ahead, just as we hope that the great acceleration is visible in your portfolio, as I said, that we continue to be totally focused on our process, which is finding the mega trends and investing with them. And with that, I can end for this month. I can just request you to be safe. I know we are all out. COVID cases are falling in India, but still take your precautions, stay safe, and see you next month. Bye-bye.